Hello and welcome. You're tuned into MF Corner in the Mumbai studio. I'm Sonal Bhutra, and today on the show we are going to discuss Bandhan Business Cycle Fund, which is an NFO, a new offering from the Bandhan Mutual Fund or the Bandhan AMC. The new fund offer will be available for subscription till September 24, 2024, and it started getting subscriptions from 10th of September, that is day before yesterday as well. Let's talk about the fund before we get to understanding this particular scheme. It is an open-ended equity scheme following a business cycle-based investing theme. And if we talk about the asset allocation as well, there will be a number of instruments which will be available for an investor to invest in. There will be equity and equity-related instruments selected based on the business cycle fund, where the minimum investment will be 80%, maximum allocation will be 100%. Equity and equity related overseas securities, where the minimum investment will be nil, but maximum could be 20%. Debt securities and money market instruments, which will include government securities, securitized debt, that is where minimum will be 0, but maximum will be 20%. This is a low to moderate risk instrument that the AMC will invest in. And this is largely the units issued by REITs and InvITs as well. That is where there will be at the most maximum allocation of 10%. But other than that, if we look at the fund managers as well, Mr. Vishal Kapoor and Ms. Ritika Behera will take care of the equity portion here. If we talk about the debt portion, it will be taken care of by Mr. Harshal Joshi, and Ms. Ritika Behera again and Mr. Gaurav Satra will take care of the overseas equity portion. So this is what the fund would look like. These are the fund managers. But if we want to understand more on how this business cycle fund would function, what are business cycles in general, to get a deep dive into this, we have with us Mr. Vishal Kapoor, the CEO of Bandhan AMC, joining in now. Mr. Kapoor, good afternoon. Thank you so much for joining in today. So before we take a deep dive into this NFO and the fund that has been offered by Bandhan AMC, can you help us understand what exactly is a business cycle?
Thanks for having me, Sonal, and a pleasure to be here. So business cycles are really linked to economic activity. And I think as most of us are aware, economic activity fluctuates. And because of the fluctuation, it goes through phases, which is what makes up a cycle. Typically, there are 4 phases as we see it in the cycle. There is a phase when economic activity is picking up, things are going better. Typically a phase of low interest rates, expansion in terms of production, productivity, etc. That's largely the expansion phase. It leads to an increase in activity till it hits a top, which is the peak phase, post which things slow down once again. So this is again time when maybe inflation is a bit higher, some amount of interest rates need to cool down things, and then you lead to a contraction phase. And eventually the contraction ends with a bottom, which is also the slump phase, when again things pick up and start the new cycle through an expansion phase. Now, if those are the 4 phases of the business cycle, what we also see is that from an investing standpoint, a slightly different approach to each of the phases of this cycle can lead to better results than just maybe a traditional buy and hold approach or other ways of investing. So that's what a business cycle fund is trying to do.
Okay, all right, interesting. So I was actually going to ask you that next. How exactly does a business cycles fund work? What is the fund manager's strategy around here when they look at allocating or investing in certain instruments?
So as I mentioned, Sonal, for each phase of the activity, we generally tend to see some sectors benefiting a lot more than the others. And sometimes even in the contraction phase, when things are not going very well, there are some sectors which will maybe still outperform. So it's not all gloom and doom in those phases. It is still possible to outperform. Now, as an active manager, if the larger mandate is to outperform the broad market, we feel that a prudent selection of these sectors, going overweight in those that will benefit from a certain phase of the cycle, going underweight or eliminating or reducing sectors which will get punished during a certain phase of the cycle, can actually help generate possibly a far better return than some of the other cycles, or other strategies that we've seen in the market. So the idea is that in a market where I think many of us would have seen that sectoral plays are becoming more important, cycles are becoming sharper and sometimes even shorter. This could be an effective strategy to try and outperform the market by benefiting from the natural phase in which a cycle or an economic activity moves.
Okay, so it benefits from the different cycles of the market. But Mr. Kapoor, if one were to understand an investor investing maybe for the first time or looking at this NFO, what would the key advantages be according to you? One, of course, as you said, it would outperform. And why is it good to have a fund like this in your portfolio? How much can you allocate as an investor here?
So great question. I think like any active fund, this one fund will actually try and outperform the market. So that's the fundamental objective of having a fund, an active fund, to outperform the market. Now, this fund employs a very distinct and a very unique strategy to try and achieve that alpha or the outperformance that we're all chasing. Here, we are leveraging this market's own force of cycles to try and make sector or stock picks to try and outperform. So that's the basic premise. Now, the way we are looking to do that is quite unique in employing both a top-down as well as a bottom-up approach. Now, for top-down, this is where we think looking at the sectors, which are often determined by where the macros are, where we are in the cycle, can be a good input. And therefore, the fund, in our case, will look at several macro factors, over 40, look at some quant screening to identify and determine which are the sectors that are likely to outperform in this specific phase, and try and go overweight that and try and reduce weight or eliminate the sectors which are not going to perform, in our view, in that sector. Once that is done, we will look at a bottom-up stock selection, saying in this sector, if there is a certain position that the portfolio manager wants to take, overweight or underweight, which are the best stocks? And that's where bottom-up stock selection will combine with the top-down. The objective being that if the entire market is available, as it is the case with this fund, how can you try and consistently outperform? Like I said, by using the market's own forces in your favor. And this, while it is a thematic fund, this comes under the SEBI's definition of a thematic fund. It may be different from some of the other thematic funds in the sense that the entire market across large, mid, small, and macro caps, as well as all sectors and themes, is available for the fund manager to choose. To actually, while it's a thematic, it's still got a very large pool of stocks and sectors to actually choose from.
Actually, that was going to be one of the questions that I was going to ask you, that if it gets into a particular sector, how does it show diversification from every other angle? But as you mentioned, it would use different approaches to ensure that there are different segments and different stocks being included in this particular fund. Mr. Kapoor, I have to ask you, because we are talking at a time when markets are looking at higher levels, is it the right time to launch a business cycle fund? Don't you think we are already at the peak of the cycle? How do you look at the current market cycle and the business cycle?
Well, that's a very interesting question, Sonal. And I think, clearly the way the markets have been over the last, several years now, one would tend to be a bit cautious and, just given the returns that one has seen. But at a larger level, I think it's important also for every investor to look at their exposure to the market and see if that is indeed optimal. Now, at an aggregate level, if we look at data, India and most investors still seem to be underweight equity. Now, this is just coming from data on how financial, savings have been, what are the split across different asset classes, and clearly, as a nation, we seem to have a lot of our money in real assets, real estate, gold, etc., and a lot of the financial assets in relatively more secure and safe and low-risk instruments. So, at a macro level, there is certainly a case to say that growth, products like equity do have a lot more headroom for allocation. Once we say that, yes, equity should be a larger part of your allocation for most investors, at least at an aggregate level, then it's a question of how do you want to go about building up your equity profile. And that's where a fund like this, while it is in a satellite bucket of your portfolio, can play a very interesting role. Because, while, one may have a view on the market in the near term, expectations may be something that one has to also be, considering of. But looking at India at a macro level, looking at the fact that it's, over a long term, which is what we want investors to consider in this fund. If you have the patience and you have the ability to look at benefiting from the India growth story over this decade or more, this and many other equity investments will offer you great opportunity. And this is a unique way to participate in this opportunity. So it's really up to an investor to see what is my allocation in equity, and at an aggregate level, it still seems underweight.
Okay, all right. That explains your rationale for getting a business cycle fund right now at current juncture. Thank you for explaining that. And we will continue this discussion, Mr. Kapoor, but we have to take a quick break. On the other side, we'll continue our discussion on the Bandhan Business Cycle Fund, which is being launched by the AMC. Stay tuned for that. The new NFO by Bandhan AMC, which is the Bandhan Business Cycle Fund. Mr. Kapoor, we discussed what a business cycle is, how do active fund managers go about selecting stocks here. But when it comes to investing in a business cycle fund, who according to you should consider investing here, and specifically the Bandhan Business Cycle Fund? And what portion of an investor's portfolio could be allocated to such a category?
Right. So firstly, Sonal, we must recognize that this is a thematic fund. And as a thematic fund, it will take a more bolder call or a larger call into the cycles, which means that by definition, it should be a bit more risk-taking than a broad-based fund. And therefore, it should be part of a satellite portfolio. So this is for investors who are looking for a greater amount of alpha and have the patience and the longer-term horizon that is required to try and generate alpha over a longer period of time. And therefore, the first-time investors who are just getting into the first equity fund, this should really not be the first fund, but it can only be a satellite allocation over a slightly more seasoned investor.
Okay.
Second is that because this is based on business cycles, it will have a tilt and a shift, which is generally going to be more than the normal average, let's say a flexi cap category or a safer category or a more broad-based category. Having said that, therefore, the objective of this fund is to try and outperform the market. And given the nature of the construct, which is the entire market being available, we are allowing the fund manager to take a bit more risk by going more overweight and underweight the sectoral allocations than a normal broad-based fund. But with the objective that long-term investors who are looking for higher alpha generation across cycles would be better served through this fund than the comparable broad-based categories that are available.
Okay, take that point. So, we've discussed what the approach is here, but if we look at the sectors and the cycle basis which the stocks are selected in the fund, if you can give us a better approach or a better idea of how would Bandhan go about that?
Right. So I think it's important to recognize that, in the market, there is not just one cycle, but sometimes several cycles that are at play, which is what makes the job more complicated and interesting almost. So there is a macroeconomic cycle within which you have different cycles as well. There is a sectoral cycle, which can be very distinct from a macro cycle. And then there is a stock market cycle as well. What's the flow in the market? What's the sentiment in the market? What's the momentum in the market, etc. Now, I think the first job of this fund is to try and incorporate all these cycles into its view. So it should look at where we are in the macro cycle, which may be slightly different, where different sectors are in their cycle, which may be slightly different again, and where's the stock market cycle. So it takes a very holistic, almost a 360-degree approach to identify which cycle or which phase of the different cycles we are in. Having done that, we then have to look at which are the sectors which are going to benefit more than the others. Keep in mind, this is a relative play. And which are the ones which will possibly underperform for some time, and then take the sectoral allocations. So the combination of these factors is what allows the fund manager to take a holistic view. In terms of, for example, the India macro cycle may be quite buoyant, quite good. But you also have to consider, let's say, the global macro cycle and some bit of slowdown that we are seeing, including in the US now with the more recent data. So the manager's job will be to to combine these two, saying, okay, if the global macro cycle is slowing down, yet the India cycle, specifically some of the themes, some of the structural benefits we are seeing in India may favor some type of sectors and stocks, then how do we pick and choose and combine it into a portfolio that can still outperform the broader market? So I don't know if that gives us a sense of the approach, but it is going to look at multiple factors. Our team looks at more than 40 macro indicators on a very regular basis to try and see what phases and what factors are actually impacting different sectors at this point in time to take a call.
Okay, so there are a lot of moving parts. As you said, it's the global macro cycle, then there's in the Indian macro cycle, and usually we have been seeing that decoupling that's happening in global and Indian markets in the last few quarters as well. So in that case, Mr. Kapoor, what are some of the sectors which will be in focus in this fund? Where do you think we could see outperformance going forward?
Right. So keep in mind, Sonal, these things will change dramatically based on how how new data informs us. And the good part about this product will be that it can be very nimble. We've also allowed the fund manager to take a larger cash call than normal. In most large funds, most stable funds, the cash call is limited to maybe 5-7% and not more. But in this fund, we think the fund manager may take a larger cash call when required, maybe go up to 15% even. Because the idea is that while we are making these calls in terms of sectors and cycles, risk management and having stability, not having a very lopsided portfolio is also going to be very important for us to construct. So at this point in time, keep in mind it's a relative, allocation table. We think that certain sectors, like for example, industrials, consumer discretionary, financial services, example, auto, pharma, can be beneficiaries in the current set of cycles. I'm saying set of cycles because, like I said, there are different cycles at play for different sectors. In some cases, a defensive bet may be more appropriate given its linkage to the global cycle. In some cases, a more aggressive bet based on domestic consumption and shifts that we are seeing, structural shifts, including the Make in India shift, including the fact that the white-collar worker in India is now benefiting quite a bit, given the shift out of China and other, services sectors. Those could benefit certain sectors. So the idea is that across a few of these overweights, one should be able to generate higher alpha than more broad-based, more cautious funds.
Okay, so that is what it would look like when it comes to sectors, and as you rightly pointed out, the churn, there can be changes in sectors basis the cycle we are in. Mr. Kapoor, is it fair to say the typical returns in this category are always better than the benchmark since the changes happen according to the cycle?
So that's certainly the attempt or the aim of the fund manager. Clearly, no one can, guarantee that. But I think the objective of any active fund is to try and beat its benchmark. The approach you take, the portfolio strategy you deploy is different. This fund, we think, is a unique approach, and it's also quite timely given the shape of the market, the nature of the market that we're seeing. I think, you would have seen, and many investors would have seen, like I mentioned earlier, that, sectoral shifts are becoming a lot more active. Sector rotation in the market has been a lot more frequent, a lot more speedier. And really the idea is that how can, a fund manager on a systemic level be able to choose to go overweight and underweight sector based on these very rapid shifts that we are seeing, but informed by very stable, solid macro indicators, combining a great bottom-up stock selection approach to construct a portfolio that can try and do that.
Okay, all right. We take that point, Mr. Kapoor. It was such a pleasure to have you with us on the show and for you to explain this new NFO that has come by from the Bandhan AMC, and generally talking about business cycle funds as well. There's been a lot of attention and interest in this segment as well. Thanks a lot for tuning in today.
Thank you for having me.
Okay, all right. With that, we'll do one thing, that we will take your leave from the this edition of Mutual Fund Corner, but you stay tuned. Closing bell